Hello, and welcome back to another episode of Market Brief After Hours. It has been a whirlwind of a week on Wall Street. We've seen volatility kicking up, geopolitical tensions rising, and some truly historic moves in the commodities market. If you were looking for a quiet Friday to ease into the weekend, the markets had other plans.
That is putting it mildly. It really was a tale of two markets this week. On one hand, you have equities struggling to find their footing, posting a second consecutive weekly loss. And on the other hand, you have precious metals absolutely tearing the roof off. It's a classic flight to safety, but the magnitude of the moves we saw in gold and silver was something else entirely.
Let's start with the equities picture here in the U.S. It felt like a mixed bag to close out the week. We saw some green on the screen, but the broader trend seemed heavy.
Exactly. Friday was a volatile session that ended with a mixed finish. The headline numbers tell the story of a market under pressure. The Dow Jones Industrial Average was the clear underperformer. It slid 285 points, or about 0.58%, to close at 49,099. That drop pushed the Dow into the red for the week, down roughly 0.5%.
And I understand a big chunk of that drag on the Dow came from the financial sector?
Right. Goldman Sachs took a hit, dropping nearly 4%. When you have a heavyweight like that stumbling, it really weighs on the price-weighted index. It effectively reversed the gains the Dow had clawed back earlier in the week.
What about the broader market? The S&P 500 seemed to tread water.
Barely keeping its head above the surface on Friday. The S&P 500 edged up just 0.03% to close at 6,916. So technically a green day, but practically flat. For the week, however, the S&P was down about 0.4%. It just couldn't regain the momentum it lost during those wild swings we saw midweek, mostly tied to trade headlines and geopolitical noise.
But as is often the case lately, technology seemed to be the safety net.
That's the recurring theme. The Nasdaq Composite actually outperformed, rising 0.28% to finish at 23,501. It was supported by the usual suspects. Nvidia climbed 1.5%, and Advanced Micro Devices, AMD, was up more than 2%. Microsoft also chipped into the upside. Because of that tech strength, the Nasdaq managed to limit its weekly losses to less than 0.1%. So while the broader market dipped, tech held the line.
Now, while stocks were chopping around, the real fireworks were happening in the commodities pit. We mentioned historic moves earlier. Gold and silver went parabolic.
Parabolic is the right word. Investors are clearly spooked by the geopolitical landscape and shifting risk dynamics, and they are piling into hard assets. Gold surged 0.92% on Friday to close at $4,984. It traded as high as $4,990.
We are knocking on the door of $5,000 gold. That is a massive psychological level.
It is huge. And looking at the technicals, gold is trading well above its moving averages. The 50-day is down at $4,352, and the 200-day is way back at $3,724. There is essentially no historical resistance overhead. The market is just staring at that $5,000 threshold. If we break that, it likely opens the door for a whole new leg of this bull market.
And silver? It seems like it didn't want to be left behind.
Silver actually outpaced gold in terms of percentage gains. It exploded 6.6% higher to settle at $102.52. Breaking that $100 level is a major milestone. It's in uncharted territory now. The momentum there is incredibly aggressive. As long as it holds above $96 on any pullbacks, the bulls are firmly in control.
It's fascinating to see that divergence. Stocks struggling while metals scream higher. Before we move on to the currency markets and international action, let's take a quick break. We'll be right back. Welcome back to Market Brief After Hours. Before the break, we covered the U.S. equity slide and the surge in precious metals. But this wasn't just a U.S. story. Let's look overseas. How did Europe handle the end of the week?
It was a sea of red across Europe, mostly due to some weak data and sentiment dragging over from the World Economic Forum in Davos. The Stoxx 600 ended down 0.2%. Looking at the major indices, the UK's FTSE 100 fell 0.9% for the week, closing at 10,143. France's CAC 40 slipped to 8,135, and Italy's FTSE MIB dropped nearly 0.8% to 44,747.
Was there any bright spot in Europe?
There was one standout. Ericsson surged 10.5%. They reported a profit beat for the fourth quarter and, perhaps more importantly for investors, announced a 15 billion krona share buyback. That bucked the trend, but overall the mood was somber. Germany's DAX was essentially flat, edging up just 0.05% to 24,868.
And moving over to Asia?
Asia was actually a bit more optimistic. Geopolitical fears seemed to ease a bit during their session, and the Bank of Japan decided to keep interest rates unchanged, which the market liked. The Nikkei 225 rose 0.29%, and South Korea's Kospi climbed 0.76%. The standout there was the Kosdaq, which surged over 2.4%.
I noticed New Zealand bucked that positive trend, though.
Yes, the NZX 50 fell 0.8%. They had some hot inflation data come out, which reinforced expectations that their central bank is going to have to stay hawkish. Inflation is still the ghost at the feast for some of these economies.
Let's get technical for a moment and look at the Forex market. We saw some significant breakouts this week, particularly with the euro and the pound.
We did. The FX markets were very active. Let's start with Euro USD. The pair closed up 0.57% at 1.1822. But the big story here is the moving averages. The price pushed decisively above the 50-day SMA at 1.1669, the 100-day at 1.1686, and the 200-day at 1.1594.
So it cleared all three major moving averages in one move?
Exactly. That confirms a clean upside breakout. It cleared the highs from December and early January. The momentum has shifted back to bullish. Traders are now looking at resistance around 1.1826 and then the psychological 1.1900 level. Those former resistance lines around 1.1670 should now act as support.
And the British pound looked even stronger.
GBP USD was the star of the currency space, gaining almost 1% to settle at 1.3637. Similar story. It broke above the 50-day SMA at 1.3356, the 100-day at 1.3396, and the 200-day at 1.3410. Closing near the highs of the session shows firm demand. The buyers have regained control after a long consolidation phase. Immediate resistance is up near 1.3700.
On the flip side, we saw the yen pull back after a massive run, right?
Yes, USD JPY finally took a breather. It ended down 1.59% at 155.83. It's a sharp pullback from multi-year highs. However, despite the drop, the long-term trend is still constructive. The price remains above the 100-day SMA at 153.58 and the 200-day at 149.58. This looks like a corrective phase for now, but the short-term bias has definitely turned defensive.
And very quickly, the Aussie dollar?
Aussie dollar had a great day, up 0.83% to 0.6896. It closed at the session high. It's comfortably above all its major moving averages. The 50-day is down at 0.6635. The structure is showing higher highs and higher lows, which is exactly what bulls want to see.
Let's wrap up with the individual movers and shakers. We mentioned the tech support earlier, but there was one major tech name that really struggled, Intel.
It was a brutal day for Intel. The stock tumbled 16%. They issued a very disappointing first-quarter forecast. They are projecting revenue between $11.7 billion and $12.7 billion, which was well below what Wall Street was expecting. It's a tough environment for them right now as they try to turn the ship around.
And in the healthcare space, Moderna took a hit as well?
They did. Moderna fell 6%. The CEO announced that the company doesn't plan to invest in new vaccine trials, citing U.S. opposition to immunizations. That pivot obviously rattled investors, who were banking on their pipeline.
It wasn't all bad news, though. Fortinet had a strong showing.
Yes, Fortinet climbed more than 6%. They got an analyst upgrade from hold to buy, with a price target raised to $100. In this market, a solid upgrade like that can still drive price action.
One last group to touch on, syringe makers. They seem to be reacting to news from Novo Nordisk.
This is an interesting derivative trade. Novo Nordisk is launching an oral version of Wegovy. Obviously, if you take a pill, you don't need a syringe. So Stevanato Group fell over 10%. West Pharmaceuticals dropped more than 4%, and Becton Dickinson declined over 2%. It shows how interconnected these healthcare developments are.
And finally, just a quick look at the economic data that came out Friday. We had consumer sentiment and PMI data. What's the verdict?
The U.S. consumer is feeling a bit better. The University of Michigan headline index rose to 56.4, beating expectations. Inflation expectations are easing, which helps household confidence. However, the PMI surveys showed growth is slowing down. Manufacturing was at 51.9 and services at 52.5, both missing forecasts. It suggests the economy is still expanding, but the momentum is cooling off slightly.
So we head into next week with gold at record highs, stocks looking for direction, and the economy cooling just a bit. It's certainly setting up for an interesting end to the month.
Absolutely. Investors are reassessing risk, inflation, and global stability. It's going to be a fascinating week ahead.
We will be here to cover it all. That wraps up this edition. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform. Thanks for listening, and have a great weekend.